Everybody, this is Patrick MontesDeOca with the live trading talk segment for November 5th, 2021. We're going to take a look at the U.S. job growth report that just came out. U.S. jobs growth gets back on track in October with 531,000 gain. The U.S. labor market got back on track last month with the larger than forecast payrolls, again indicating greater progress, filling millions of vacancies as the effects of the Delta variant faded. Non-farm payrolls increased 531,000 last month after an upward revised 312,000 gain in September. The Labor Department showed Friday the unemployment rate fell to 4.6%, while the labor force participation rate was unchanged. The medium estimate in a Bloomberg survey of economists called for a 450,000 payrolls gain and for the jobless rate to fall to 4.7%. The faster pace of hiring shows that more Americans return to workplaces as COVID-19 cases declined and employers offered higher prices. Some of the payroll growth may have also come after an estimated 7.5 million people lost federal expanded unemployment benefits on September the 6th. Good morning, everybody. We're going to take a look and see what the markets are doing and how we are going to trade this information. The gold market is up $7 to 1801. Silver up 6.5. 1805 is the high for gold. For silver, 24.14. We have a kind of a mixed market here, very green in the metal section. Well, we have a kind of a mixed bag, so to speak, unchanged almost in the digital markets. The effect that this report has right now is bullish for the precious metals, bullish for stocks, as the panic, you might say, or the fear of the variant expanding seems to be changing to a neutral status to potentially the end of this epidemic. And there, obviously, according to the Labor Department numbers, indicating that there is a large number of the workforce coming back looking for jobs. This is just confirmation that the economy is picking up, that the economy is showing signs of resilience. But we're running into a situation that I think is going to take some time to resolve, and that is essentially the supply chain bottleneck that we have. Over the next 3 months, we probably are going to see more demand coming into the economy. And we are running into a wall of supplies, the lack of supplies. And so I think we have to allow for this relationship to unfold in terms of basically the price adjustment that is going to be made into this period of time, and hopefully see that even though we may get a short squeeze of price inflation as a consequence of this shortage of supplies, hopefully, as we move into next year, this situation will be resolved in order for the economy to start coming back to some kind of normal balance of the supply and demand. Um, but we're going to be running into even more pressure as the numbers indicate. The economy is coming back strong in terms of the availability to find supplies, and this goes from everybody, from tech companies looking for computer chips, which is in a tremendous shortage, and um, there are more issues that I think are deeper than obviously what I'm talking about. But um, unfortunately, Taiwan is um, a major supplier of computer chips, and there is some uh, differences of opinion developing in that area with regards to the ownership of Taiwan by China. But that's a different discussion. And if we come back to the markets here, again, um, you know, if you've been a bull in this market for the last, year and a half, obviously it's been pretty frustrating to see the gold market inverted to the fundamentals. And as we move into this new economy, this tremendous economic potential that we have, it's a question of, pretty much how the U.S. dollar is going to be, so to speak, dealing, or at what level are we going to be dealing in relationship to a strong economy. Um, so we are calibrating into this adjustment that we have, and the thing that is uncertain is that we really don't know if these values that are adjusting to this new economy, these new values, taking into consideration the inflation rate that seems to be around the 5.4%. According to Shadow Stats, the inflation rate is running much higher than that if you include food and energy, which are the components that were taken out of the index um, as considered too volatile. Um, but I think volatility is something that we're dealing with across the board. I mean, if you just look at, what's happening in the equity markets as well, that regardless of what happens in the economy, the stock market continues to make new highs. And I wanna point out to you that the fact that the gold market or the stock market have not responded to the common sentiment, you might say, that people have out there, that they've been calling uh, the stock market to collapse, and pretty much calling for the gold market, the precious metals to collapse, and a lot of attention has been given to digital currencies, to Bitcoin. Um, but we got to come back here for a minute and take a look at this situation. I believe realistically, and it is pretty much highly unlikely that without any challenges politically, or in terms of regulation, that Bitcoin um, will become what most people seem to think, and is a world currency. Um, anything is possible. But the idea behind Bitcoin, which is what I'm getting to, is the fact that the U.S. dollar is declining in value, and people are looking for places to put their money into, ideally that are decentralized. Now, uh, Bitcoin, one of the values of Bitcoin is the fact that it is a decentralized chain that uses a blockchain basically as a foundation to create its own ecosystem and manage its own ecosystem away from central banks. And so it has become a very challenging asset, no question. There's trillions of dollars that have gone into that sector. But and potentially some of that money, has been taken away from the precious metals. Um, but if we come back to again why I'm particularly trading, almost exclusively in the precious metals area, I am trading into the digital currencies as well. But the fact that the gold market has not reacted is telling us a message. The gold market is saying something that most people are missing. And uh, understanding that this monetary system is changing, we're moving into this new economic system, and it's demanding a new currency, a new way of dealing in that economic system. And with the digital world, obviously, coming into reality, the US dollar, in terms of a fiat currency, does not fit into that equation. And that's pretty much, obviously, why these digital currencies are being created. Um, there is still a lot of risk, and if you are a highly aggressive speculator and you want to invest into a lot of these developing technologies, I think there is the potential to make some fiat currency in there, but it also runs some risks that I don't believe we have yet to see. We have yet to see in terms of the amount of fraud that's been committed in the digital um, arena, and I think as we move on, we're going to begin to see pretty much what that's about. Coming back to gold and silver, to me, the fact that the gold market has not moved yet on the face of the most bullish fundamentals is telling me something. The fact that the stock market has not collapsed on the face of all of this challenges economically is telling us something. And I believe what we can potentially interpret here is that, at least in terms of what the gold market and what the stock market is saying, is that they are anticipating the opposite of the sentiment of what everybody is thinking. And pretty much what they're anticipating is not that interest rates are going to go up, which is the fear or the talk of the majority out there now, with the tapering coming down, reducing by 15 billion a month, I believe. So by next July, sometime next year, we're going to be dealing with the fact that interest rates is going to be the issue, and we have to see at that point where the economy is in terms of the direction that the Feds are going to take with interest rates. So, we have to see still as the market unfolds into this economy. But what the gold market and the stock market I believe, is anticipating or forecasting is that rates are not going to be going up. And so therefore there's no threat of high interest rates, even though the talk is out there about tapering and about raising interest rates. When the market begins to see this, I believe it will make a difference in the price of the metal and obviously the stock market as well. The only thing that I see as a tremendous anomaly is the spread relationship between the gold and the stock market, which is at record levels. And so either, gold is going to catch up to the stock market as the market continues to move up, or we're going to see a correction in the stock market adjusting to the gold relationship at a more normal level. So it's important as we move on again into the next few months to take a look at the dollar in relationship to pretty much the economy and interest rates. And that's the uncertainty that we have right now. Coming back here to the metals once again, I believe this is an opportunity that the market is telling you. When nobody wants it out there, when it's being ignored, that's the time to be accumulating. And for those that have been accumulating, be patient, continue to accumulate. I believe this is going to turn anytime in the right direction, adjust to its mean. And we're looking at the market breaking out of the 1830 level, and that will be the beginning of the acceleration towards that 2000 level that we're looking for in this cycle between September 28, 2021 and September 28, 2022. Thank you again for the opportunity, my friends, to share this with you, and I'll talk to you soon. Be well, be safe. Take care.